Japan's problems are killing us. Japan doesn't need a crisis to cause one. They just need to defend the yen. And that's why Japan is no longer just Japan's problem. When a major currency comes under pressure, money doesn't sit still. It moves, and it moves fast. For more than 3 decades, Japan has pushed its monetary system further than almost any other country. After the asset bubble burst in the late 1980s, growth stalled. To fight that, the Bank of Japan cut interest rates to zero, then below zero, then began buying enormous amounts of government bonds. Today, Japan's central bank owns more than half of its entire bond debt. For a long time, that kept the system stable. That stability is now extremely under pressure. Japan's government debt is about 260% of GDP. Roughly a quarter of all government spending already goes to interest. Now long-term Japanese bond yields are rising. That combination is forcing difficult choices. Japan also has a national election on February 8th. You need to know this. A weakening currency going into an election is politically dangerous. So there's strong pressure right now to keep the yen from sliding, even if that support is temporary. Markets know this. You need to know this too. And markets also know that once the election passes, those guardrails can disappear. And here's the critical point. Japan is the largest foreign holder of U.S. government debt, with over $1 trillion in treasuries. If Japan steps in to support the yen, they need dollars to do it. That can mean selling dollars and potentially selling treasuries. When that happens, U.S. interest rates can rise and financial conditions can tighten. Even if Japan does nothing, the stress doesn't stay contained. This is not the moment to guess headlines or trade currencies. It's the moment to make sure you're not exposed the wrong way. Focus on this. Large global companies with international revenue, some exposure outside the U.S., real assets like energy, metals, and agriculture, strong cash-generating businesses. Keep your liquidity so that you're not forced to act. These are the areas that tend to hold up when currencies get unstable. Let me tell you what not to do. Do not panic. Do not chase fast moves. Don't assume the central banks can smooth this out perfectly. They can't. And don't put everything in one place and hope for the best. This is not about fear. It's about recognizing pressure early. Currency stress shows up quietly and then suddenly matters. Investors who stay flexible and diversified usually come out stronger. Those who ignore it often don't. One of the key things I tell investors is always keep your buying power low. Events like this are coming. Today we're down huge. Tomorrow it could be down even more. Be very careful, hold your buying power, and look for these types of trades that I've mentioned above. Now, if you found anything in this free video helpful, make sure you subscribe. We're going to be here every week, breaking down market risk and strategy in plain English, so you can understand what's actually going on and position yourself accordingly. Maria and I do a show every single day, Monday through Friday at 3:30. You can see us trading live. We always put on trades at 3:51 p.m. Eastern Time. We make 5,000 or 6,000 some days. We lose 5,000 or 6,000 some days. I put on over 120 trades every single day in the SPX 0 DTEs, making or losing somewhere between $45,000. Maria does all types of trades as well, mostly the wheel strategy and naked puts. And you'll see my son, 30-year-old son, Tyler, he does day trading and scalping on the NQs. We also give away a lot of our free trades every single Sunday at 6 p.m. for the entire week. If you're interested, come and watch it. I hope you have a great trading day.